Hi everybody, this is CPR Professional Corporation. Welcome everyone come to our seminar. So Dandi Zhao lawyer and our CPA firm are going to represent today's topic about the assignment. Okay. First topic we're going to talk about the assignment sale, how to calculate HST calculation detail. Okay. So there's a new rule being represented for revenue agency, okay? And a lot of clients asking, when I sell the assignment sales, is it part of deposit need to pay HST? Okay, there's a new rule being announced on 2022, May 7. Previously, when you assign this HST, when you assign the assignment sale, deposit part of HST need to pay to revenue agency. But after new rule being pronounced, okay, any offer signed on and after May 7, 2022, part of deposits HST is being canceled. So in the future case, as right now, on the assignment sale, we can say it's no need to worry about deposits HST, okay? So only parts HST everyone need to pay is gain, price difference. First offer, first when you buying the price you buying from the builder and the different you sell this assignment, the different price you need to charge HST. Okay, so but revenue agency saying you need to put in wording on the offer, okay, the agreement offer saying okay. Part of consideration paid under assignment agreement is solely attributed to reimbursement of deposit paid under purchase agreement. So usually when we sell assignment, buyer and seller have a money transaction. First is a deposit because builder will not return the deposit to first buyer, right? So the first buyer's deposit will being paid by second buyer. So which means seller gonna receive money regarding the deposit from the buyer, okay, on the assignment sale. For this part deposit, it's no more being charged HST. So only the price difference it's being charged HST. So we have a detailed calculation here. We can show everybody. Okay. The selling price of assignment is 1 million. Original price with builder is 700K. The price difference is proceed of this assignment. The gain of this assignment is 300K. So HST, how we're gonna calculate HST? We use 300K divide 113. So we need to separate this 300K to 113, okay? And then we're gonna calculate 100, it's 100 per part of 100 and part of 13. So part of 13 is HST part, okay? Part of 100 is income. So we need to divide. It's not simple as most people thinking HST is 13% of 300K, it's not, okay? You need to divide. So 300K is including the HST, okay? Very clear, okay? So also, when you sell this assignment, you're gonna involve some cost, especially for agent commissions, that's a huge amount. So agent commissions in Ontario, you need to pay 13% of HST. So that's the reason you can deduct this 13% of agent fee, which in this case is 5,200. So total you collect HST on the 300K, including all the HST you collect is 34K, around 34K, and then you divide 5,000K, 5K of the HST you pay. Remaining amount is bottom, we already highlight. That's the HST amount we need to submit to revenue agency. Okay. Usually usually HST sale, when you submit the HST, its due date is 1 month after you closing. Okay, it's no next year. So be careful about that. So when you have a client sale assignment, you know they need file HST return. Try to asking them find a professional accounting as soon as possible.
So they file it 1 month after the transaction or the closing?
Closing day.
Closing day. Final closing.
But most of the case, if it's normal, like simple person in Canada, most of clients they don't have HST account. That's the issue. You need to open HST account. So for local people, local taxpayer, that's okay. You can phone revenue agency right away, or you can open online, like 1 day or 2 days, you're gonna open HST account. But the difficulty is for non-resident person. Non-resident person, if they want to open HST account, first thing is they need to have ITN. When you apply ITN, usually it's 4 weeks of processing ITN. And then when you got ITN, and then you need a paper to or online to apply the HST account. So that taking long time. Usually for non-resident, they easily pass the due date. So that's the thing. Asking client.
What's the penalty?
Interest for the tax owing. Okay. So if you have a client potentially highly chance they're gonna sell this assignment, right? They got a firm offer asking them to open HST account just right away to file before the closing day. You can do this in advance if you have a firm offer.
What does ITN stand for?
That's a good question. Individual tax number. You can Google that. Sorry about that. I don't know the like the same number. It's especially for non-resident file tax returns number, account number. So second, we're going to talk about tax issue on non-resident seller. Especially most complicated is the seller sale assignment. Yeah, that's the most complicated. If you're doing one case, you will learn a lot of tax. Okay, so first question, who's gonna respond to pay HST for non-resident sale assignment? Okay, revenue agency saying usually assign all. Okay, seller is responsible for collect HST and then remit to revenue agency. So which means seller need to pay HST and then give to revenue agency. Okay, but if assigner is non-resident, which means seller is a non-resident. So assignee, buyer needs to self-assess and then collect GST, HST to revenue agency. What's that means? So when you know assignment seller is non-resident, that means HST they need to pay, but buyer need to help seller to submit to revenue agency. So because revenue agency saying if there's tax rule, special tax rule saying the supplier, the seller is non-resident, okay, it's required recipient buyer to counter for HST about this. So which means buyer need to submit this HST payment. It's still seller pay the HST, still seller respond the HST, but buyer need to cooperate to collect this HST to revenue agency. Okay， 我用中文讲一遍哈，这个有点 confused 哈。那政府说了，卖楼花谁来交税啊？正常情况下，本地人卖楼花 HST 是由卖家来交税，但是如果遇到卖家是非居民，税务局有要求买家替卖家把这个钱交给税务局，钱还是卖家要出，但是买家有责任交给税务局，因为卖家是非居民，就像我说的，如果卖家去非居民要开 HST account， 它的过程太复杂了，税务局说了， 那买家你有责任替他把这个钱收到交给税务局，要不然，所以行内大家就会知道说，如果你买非居民的楼花，税务上不处理好，将来可能买家要承担所有的税务后果，因为非居民卖完房子，他有可能再也不回来加拿大，政府是收不到这个钱的。Okay, so if non-resident sell a Canadian property, if they don't pay tax, buyer have a chance being audited by revenue agency and then buyer to pay these tax owing.
So how to collect it from the non-resident? With the lawyers, I would withhold the money and.
That's the good question. When you give offer to buy this assignment, you need to put in wording on that. If seller is non-resident, we have a right to hold this HST and then on half of them to pay to revenue agency.
Yeah, we'll cover that in my
Okay,
presentation.
all right,
Yeah.
thank
If you don't put it, maybe lawyer gonna have a difficulty.
It's gonna be very difficult because the other side wouldn't agree.
Because in most case, non-resident even don't know they need to pay this tax. When they come to close, they realize they need to hold this HST. They probably gonna fail this case. They're gonna say, oh, I refuse to withhold this money, or you just cancel to buy my property. Especially when prices go up on the market. So they highly chance saying, okay, I refuse to sell. And then buyer have a chance, if they continue to buy this property, they have a liability for future HTP audit.
所以针对那些 non-resident 的 assignment, because this year I think I have a lot of non-resident assignment, condo assignment. Yes. So that's why we have today's topic. So for the non-resident, when they do the closing, so there is two HST. One is the profit HST, right? And one is for their, this is the same HST.
And we receive, I think this document is provided by Dandi's lawyer firm, right? They're gonna especially tell the seller if they not register for GST, HST, buyer gonna sell assessed remit to revenue agency. Just let the seller know whole transaction, they're gonna hold this HST. We see the builder. Sometimes, in some case, builder will involve, saying, okay, if you guys feel builder involved this because it's concern about the builder when you sell the assignment, right?
Sometimes the builder gets scared that it's not properly dealt with, so they will put into their consent document that they require you to remit the HST to the builder and the builder will remit to the CRA. But it's very rare, but I've seen it.
So that's why this last year, the end of last year, I heard there's some assignment deal. Builder request the assignment agreement from the assigner and the assignee. Normally, builder didn't see that assignment agreement, right? Just between assigner and assignee. But recently, they have the builder this requirement.
They don't want to be held responsible for that.
Yes, yeah, you're right.
But if builder collect HST, they will not allow you to deduct agent fees HST.
Yes,
Is that
that's right.
You want to pay more.
Yeah, and they're saying that if you think you are entitled to a refund, you need to apply to the CRA directly to get it back. Yeah, they don't care about the deduction
So
of.
it means pay first,
Purchase
like the
deduction.
Full
pay
amount.
first, then.
So they overpay.
Okay.
But it's very rare. Like it doesn't happen.
It's kind of difficult asking revenue agency back about
I know, right?
agency's HST because
That's small.
it's theoretically the account is no belong to this seller,
I don't
right?
even know how the builder does it. Like where do they submit it to? But yeah, I've seen it happen.
Then we're talking about non-resident sell the property. They need to doing clear certificate, okay? Which means, what's the means clear certificate? If you are local taxpayer, when you sell the property, usually principal resident or investment property, you're gonna file return after the year end. Like this time, you're gonna file last year's return. You're gonna put in file to revenue agency saying, oh, how much are gaining on this investment property, right? So, which means after closing, you got all the money, and then later on you file tax return. But for non-resident person, no, you cannot get the full amount of money on the closing day. Revenue agency requests lawyer to hold the money, and until these taxpayer, non-resident taxpayer, pay the withhold tax, pay the prepaid tax. Okay, so because the revenue agency think maybe you guys sell the property and grab all money, you will not come back next year pay tax. Okay, that's the rule. They're asking lawyer to hold money. Okay, so most the case. So we continue last case, like when you sell 1 million assignment, lawyer usually hold 25% of 1 million. But some case, okay, on this, it's no bill, new bill, right? It's second-hand property, some lawyer hold 50%. Maybe you can talk about it.
For rental.
A rental investment. Okay. So Dandi gonna talking about, we have one couple question discuss why lawyer hold 50% of this. Okay. Because it's holding 50% of this compared to 25%, that's double. Taxpayer gonna argue about why lawyer paying so much. So
Just wondering, where do you see CRA actually charging more than 25%? Like their bill, CRA's bill?
I don't put it on the PPT. Sorry about that. No, I thought your part gonna talk about it. So
That's okay, I'll cover.
but usually assignment is 25%, right?
Yes.
So 25% of 1 million. So some clients saying, oh, Crystal, this assignment sale, I get a loss. I didn't even gain the money. Why lawyer holding 25% of selling price? Okay. Lawyer is no accountant. They don't care about did you gaining money or lost money. Okay. They just simply follow revenue agency's rule. Just hold the selling price 25%. So which means some assignment sale, the seller need to put in extra money to lawyer trust account. So if they don't profit enough. Okay. So on this case, lawyer holding 250K. Okay. So CIA gonna withhold tax. So CIA withhold tax based on accounting calculation. So how much you buying, how much you selling price. The different on the previous case we just mentioned, right? You buying is 1 million and you selling is 1 million, you buying is 700K. You gaining profit is 300K. So the revenue agency will asking the accountant to calculate how much the gain. So we calculate that it's 300K. We represent the revenue agency. Okay. The time about this certificate application is 10 days, within 10 days of closing date. Okay, that's important. If you later file, revenue agency gonna charge penalty, $25 per day, 100 day maximum, so which is 2,500. The max. You guys have a client sell this assignment, even you guys have any non-resident sell Canadian property, you need to info client within 10 days of closing, you need to find accounting, submit application about this tax withhold. Okay? So one method you're making this easier, when you guys know the seller is non-resident, after they have a firm offer, asking them, try to find an accountant right away. Because when the day you apply this application, up until you closing, you have 3 months. Usually, right? Usually in Canada, in Ontario, when you're buying something, you have firm offer until you closing there, 3 months. At that moment, when you have firm offer, find an accountant to do the application first. Let's saving 3 months. Because after closing, the money being held on lawyer's account. So if doing the advance on revenue agency, just a simple way, just line on the way to apply application for these tax clears. Okay? So let's make things simple. Saving client 3 months of time, being holding money on lawyer's account. Okay? That's the simple way. Asking client have firm offer, find an accountant to submit the application. So the tricky thing is most people thinking it's 25% of gain being withheld on revenue agency. But recently we have this assignment sale. Revenue agency 0.5. This assignment sale is business income. So the tax withhold rate is over 25%. So you can see, okay, it's no simply withhold 25%, okay, for the gain rate. So I put in note here, if assignment sales rate made more than 25%. So for this case, 250K, based on business income tax-free withhold, it's around 150K. So when we receive this tax document, we can see, okay, that's where calculation being proved by revenue agency. Revenue agency saying, okay, accountant calculate the business income is this amount. So base its business income withhold tax is no more 25%. It's no capital gain tax withhold. So it's around 30%. Sometimes it's even higher. It's basic tax bracket rate. So this amount of money need to pay by lawyer. So we send this document to lawyer. Lawyer gonna pay this money to revenue agency. After lawyer paying this amount of money, we got a certificate. And then we turn back this certificate to lawyer. Lawyer gonna refund remaining money. Okay. So that's a lawyer refund for this case. Okay. The sample case number is different as this CIA letter. Okay, this is just for sample letter. You guys know sometimes it's over 25%.
Crystal, in case 就是今年的 assignment a lot didn't have the profit, so we still do the same process.
Same process.
But no need to pay the HST.
Yes. No need to pay, but you still need to file. The revenue agency know you're gonna have filing this.
So no profit, but still do the clearance certificate.
Yeah.
I still hold the 25%.
Regarding that, well, I'll get you some different ways to do it in real life, basically, in my part. Yeah.
One more question. Right now, a lot of international students, right? They didn't do the tax each year. Then maybe they hold the property 6 years or 5 years already. Right now, they decided to sell the property. So when they do the clearance certificate, so normally they need to do the previous year's tax on.
That's a good question. If they still have time before the closing,
Yes.
okay, they still in Canada, they can file Canadian tax return. And then lawyer usually will see the status and then at least see 3 year notice assessment. Okay, if they can do this, that's okay, right? They living in Canada.
Yeah. So in certain scenarios, when we are satisfied with this international student's tax situation, we may be able to treat this person as a tax resident. Therefore, no holdbacks needed. But everything need to be on the right track. Okay? So if we have seen situation where the student is not here upon closing, where the study years have ended, like the study permit is going to expire very soon. For a situation like that where we don't think this person is actually going to stay here and continue to be a tax resident, then we may not feel comfortable doing so. But if for a very normal student, let's say second year of university, 4 years of study permit, just forgot to file the taxes, then and this person's here, like studying right now, then make up for your tax filings, we may be able to treat this person as a tax resident and no holdback.
No. Yeah, I have 2 cases. They all just graduate a couple of years before. Right now, the owner's brother living inside. Then this year, they try to sell the property and ask me what should we do before selling the property. I said maybe your first job should have looking for the accountant to file the previous tax first, right?
Is it the owner physically living in Canada right now?
Physically, go back to China.
That's good. That makes things complicated.
Yes.
If they go
it's
back to
really
China, it's
true.
difficult to prove it's still Canadian taxpayer.
Yeah, I think that will be treated as the non-resident.
Yes. Even if file previous return, they still treat it as non-resident, need to go to clear certificate for processing. Okay. But the good news is, if this owner can prove they living this property for a couple years on the history,
Yes.
we highly chance will get the principal resident exemption. Okay, they still can saving some tax. If they can prove
Yeah.
they physically
Yes.
living this property.
They live inside 4 years before they are UT student, right? But after graduate, they go back to China.
Yeah, we can say, we can help them save tax.
I let her contact you.
Even
before
they
go to the
pay some
property,
tax.
Go to the market.
Yeah, even they pay some tax. Previously, they have tuition credit. They can use tuition credit to apply to reduce some capital gain tax. So we still can do it. So international student file tax return is very important. Yeah. So we can do, in this case, we're doing a lot. First thing is file the previous year's tax return.
Yes.
And we have a record of about tuition credit on the file. And then we're doing clear certificate. And then tell revenue agency. Couple years, like this case is 4 years being principal resident exempt for this property. We're gonna apply to reduce tax withhold. Even can reduce tax withhold at the first step. And then doing rest of final tax, we apply tax tuition credit to final tax. And overall, maybe they don't pay any tax.
Oh,
We have to do it.
great. Thank you.
So Crystals, I'm late. Can you briefly explain? So how did you get this as HST number?
Here.
So
You look at the
that
column. This case is selling price 1 million, and then the
the
cost
profit is 300,000, right?
300K. Yeah.
So the HST is 300K minus the agent commission, and then it's 16%.
Profit minus cost, or the cost.
Oh,
We
the
first
Okay.
we first calculation is separate HST and income on at least 300K. The first
Okay.
step. Okay. We use 300K divided 113.
Okay.
Okay. The 13 part is HST, 100 part is income.
Okay.
And then we apply the second column, it's the cost. We separate the cost. Every cost they have, do they have HST, do they have the expense? And then when you filing HST, you're gonna reduce the agent fee, you pay the HST.
Okay.
The remaining amount is the HST you need to pay.
Okay.
Understand that?
Yeah.
Okay, it's easier. So this amount income, you still can reduce the agent fee you pay. Net of HST fee, expense. So the final tax gonna pay income based on this amount.
Okay. Okay. Got you. Thank you.
So usually, when you file the certificate, we got the certificate, we got the CI result, we got the lawyer refund. That's first step. On the next year, revenue agency requests client to file final return. They actually have a two-step for non-resident sale Canadian property. When the final return, client can deduct every cost related to this property, like a renovation fee, lawyer fee, accountant fee, and then to reduce net profit. After reduce net profit, they have tax free. So most people think non-resident paying 25% of tax. No, they also have tax bracket based on this. So next year when we file final return, we reduce all the costs, and then net income apply to this tax rate. It's very close for local people. That's the local people tax rate. It's no big difference. Don't think about non-resident buying house, capital gain 25%. No, that's without tax 25%. The final return, they still need to calculate based on theoretically tax bracket. Okay.
Do they have capital gain exemption?
Yeah,
They
50%. They
still
also,
have.
So very close for local people paying tax.
Okay.
Just because processing is complicated, it doesn't mean we're paying more tax.
就是 assignment profit assessing.
No. Yeah, assignment profit is business income.
Yeah,
Yes, business income.
assignment is business.
Yeah,
income, but
second
if it
hand
is-
property is capital
If it is
gain.
already like, let's say it's resale,
Oh,
then they
yeah,
still have the
resale,
capital
yes.
gain.
So
Especially
assignment 100% I think better.
Yeah.
local people also are
Yeah,
Yes.
same thing.
same for those.
是 tax 不理他们，有交出去
It's
的
no big difference.
That's why I think that this year's all the assignment.
Cannot sell.
Not easy. Also the
Very
assignment
difficult to
that's
sell the assignment.
You know, this year UHT, right? Federal government saying, okay, we need to file asking the non-resident file this house, underused
Yeah,
house tax. So we realized that a lot of people do not file rental income. We have one case, they file this
你退什么？
UHT tax, they have 7 years rental income don't report.
So before doing this, have to.
哦，你说那个2万4，
And then
自
suddenly
住
we
2万4，
realized
自
that
住不用交，是投资。
non-resident really pay a lot of accounting fee for that. Rental
这个
income
rate 应该是
Toronto's-
按这个来计算的。
tax, right, underused tax.
Yeah.
And then federal, weekend, yeah, Toronto called weekend tax, okay.
Underused
And
tax.
federal government called the underused tax, okay. So they need to pay a lot of tax accounting fee.
Good for the content.
Big time, big time.
也可以收1000。
I would say it's not easy to handle because they cannot provide, like, very simple, we're asking local people to provide property tax. That's the easier way to get it. They don't even look at the property tax statement. They don't know how that look like. Okay, they say how to find my property tax. So that's communication cost. So my part is
就
finished.
是在这边
Oh, okay, thank you.
其实对我说，这点太贵了，正常不正常？我问了几个
今年这些非正常的文化转让
100
真的挺头疼的，就是税务上这么复杂，而且他们之前
5%。
还有一个他们人不在这，他又想要高利润，其实到最后算下来是没有多少利润，即使看到
不赔钱是好的呀，好吗？
所以早买的人会卖掉，早买正买。
So I'm gonna
就是到了
distribute my card.
是
Just
给会计师楼的，
I think it's
给经纪个人的，
Crystal 要不要也分享？
对，
还不算 family，个人一个经纪个人。
这个
没有
accountant 的有经验真的是
没跟我说了好几次，
太重要了。
还有 accountant 跟 lawyer 一起
对对对
也不多。
是真不便宜。
接下来这些 non-resident 就要他们这种两个合在一块的队伍，要分开的话相互打架，两人之间打架就更打了。
他们打，他们打。
我们不打架的。
对，所以他们
蚂
好嘛
蚱，蚂蚱。
你这个没有放贷吗？
okay.
明星大明星
So
哦，你
thank you, Crystal, for your amazing presentation. I'm gonna talk about assignment from the legal perspective. So I already introduced myself, and you got my card. So we're gonna dive right into our content today. Okay, so I'm gonna briefly talk about the assignment procedure first. This is the overview from the beginning to the end of what an assignment is from a very practical point of view, okay? So in the very beginning, when you have a seller who wants to sell the property, that's what we call a assignor. So assignor, when they first have this intention, you should reach out to the vendor. So the vendor here is the builder. So that's what we call them in the contract. So the vendor is the builder. Reach out to the vendor to confirm whether you accept assignment request at this point. Because each vendor has their own window of accepting and reviewing assignment requests. You need to confirm this because if the window is not open right now, you may need to wait for a couple months or even longer for that. Once you confirm the vendor is actually actively considering assignment requests, then you can help the assignor find a buyer. That's what we call assignee. And then the two agents of both sides will work together to draft the assignment agreement. You can put in the lawyer review condition, and at that point, we can review the agreement and make certain comments and changes and amendment. And after the lawyer review condition is complete, the conditions will be removed. And at that point, the assignor, or the assignor's agent or the lawyer, assignor side will submit assignment request to the vendor. And then the vendor will issue the requirement list. So that's where the vendor will tell you to consider this assignment what we require from you. And normally it's certain documents from the assignee. So for example, IDs, assignee's personal information, SIN number, mortgage approval. So assignee need to be cooperative and submit all the required documents to the vendor for review. So the vendor will take a look of everything, and that's where the vendor collect their fees as well. So their assignment fee and their assignment legal fee. So once they have all the required documents and all the required funds, the vendor will say, all right, okay, we can proceed. And that's where they issue the assignment consent agreement. So basically, this is the agreement that the vendor is saying that to grant this assignment, I will need both parties to sign and agree to my term in order for the assignment to be effective. And then the assignor and assignee will have a chance to review the consent agreement with the lawyer, and they sign, they return it back to the vendor, and the vendor will have their representative sign, and then will return it back to the assignor and assignee. So at that point, the assignor and assignee have a copy of the consent agreement that's fully executed. That's when they actually got the consent. Okay, so not any step before. It's only when they have the three parties signed assignment consent agreement. That's when they get consent. And after that, the lawyer of both sides will take a look of the payment schedule for the assignment. Like the profit and deposit. So we'll complete the payment of both sides, and we'll ask both sides, the assignor and the assignee, to sign some assignment closing documents, and then we'll close the assignment transaction. Okay, so this is just an overview of very briefly like what's actually happening in the assignment process. So every time I do this presentation, there's a lot of questions. So if at any time you have any question, just let me know, okay? Because other people may have the same concern. Okay. So any question about the procedure? Okay, let's proceed. All right, okay. So we're first gonna talk about what you should consider, what you should do before the assignment transaction is firm. Okay, so when you have the condition, you still have the chance to do a lot of things, and you need to do them before the conditions are removed, because once the condition is removed, if you find a problem like here, it'll be very hard to resolve. Okay. Okay, so first is the assignment window. We mentioned that in the last slide. A lot of the vendors, they will put in their original APS the condition for assignment. Okay. They will say that I need to be able to sell like 90%, 95% of my units, and there are other requirements too. Okay. But instead of reading that, because by reading that you wouldn't know whether vendor already made their conditions, right? The best way is to email the sales office just to ask, are you accepting assignments now? It doesn't mean that they will approve your assignment, it just means that they're considering it, like they're actively reviewing assignment requests. So just ask them, like, are you accepting assignment requests? So if they do, then you can actively try to find assignee, like the buyer, and then you sign the assignment agreement and you proceed forward. But if they say that, sometimes they will get back to you and they will say that, oh, we will only consider assignments like 3 months before the occupancy date, and we're not considering it right now. That means if you do the assignment right now and you submit the assignment request, it's gonna be sitting on the vendor's desk for like months, and that could create problems for the assignor and assignee. Okay, so it's important to ask this question, and this is also about managing your client's expectation, because when you do this transaction, the assignor and assignee, they may be thinking that I should be able to complete the transaction very soon, like I can get the money, where the assignee may be thinking this is a good deal given the current market. So if you don't do this, your clients may have a problem down the road. Okay, and the second part is to confirm whether all the benefits are transferable after the assignment. This is regarding like when you get an original APS, you can take a quick look, or the lawyer can take a quick look under the lawyer review condition. You will see there are a lot of benefits normally given to the assignor. Just to give a few examples, there are charges and levies cap. This is under the adjustment section. I'm sure you have seen like very expensive levies, right? Like education levy, development charge, park levy, art levy. So that could be very expensive, and we see a lot of agreement where they are capped. So that's one of the benefits. And then sometimes there are free upgrade given by the vendor to the assignor. And there could be other like credit. We have seen credit given for 2 years of management fees. And there's the right to lease during occupancy. So all of those are additional like actual benefit given to the original buyer, like the assignor. Okay, so if the assignor continue the transaction and close with the vendor, then the assignor will get those benefits. But it's not certain whether the assignee can still get the same benefit after assignment. We have seen cases where the vendor is telling the assignee that once it's assigned, all of those benefits are waived. It's not transferable, it's not assignable. And this could be very expensive, right? Those could be worth a lot of money. So what you do is that what we do is if you have a lawyer review condition, as part of the review, we're going to send an email to the vendor to confirm whether all the benefits are assignable, are transferable to the assignee after the assignment. You can do this too. You can email the sales office, but if you have a lawyer condition, you can do it. The reason why you have to do it now is that this assignment agreement is not firm yet, right? So you still have a review condition. If the vendor email you back saying that, oh, sorry, nothing is transferable, we have seen it happen because the vendor wants to make money out of the assignment, right? So by waiving all the benefits, they can make a lot of money. Okay, so if that's the case, because the offer is not firm yet, you still have a chance going back to the assignor to negotiate how to deal with this. There are many different ways to deal with this. We have seen when the caps are waived, you can negotiate a deal with the assignor. You can say that anything under the cap, I will pay, and anything exceeding the cap, you need to pay, or we can split in a certain way, okay? And we'll adjust upon final closing. And like if the right to lease is waived because of the assignment, you can say that, oh, let's decide on a fixed like amount. You need to compensate me like, let's say $2,000 or something. And this is all negotiable because the offer is not firm yet. But if you don't do this, if no one does this, then when are you gonna find out those benefits are not assignable? You're gonna find out when you receive the consent agreement from the vendor, and that's very late in the stage. At that point, you don't have any other condition left, right? So there's not much room for negotiation. And if you don't do this and you find out from the consent agreement, at that point, you're going back to the assignor and say that, oh, I find out from the consent that those are not transferable and it's worth like, let's say $10,000, can we cut a deal? The assignor is gonna come back to you and to say that there's no condition on this, like I don't agree to this, and you have to proceed to closing out the assignment. Okay? So this is very important. It could be worth a lot of money. Okay, any question on this?
So that means before builder issued the consent, deal has been firm.
No.
The agreement has been firm, and then
No.
send the request to the builder.
No. Okay, so every assignment agreement will have a condition to receive vendor's consent, right? But the condition depends on how you write it. Normally, what we see is that the condition is to have vendor's consent, but it doesn't have anything about reviewing vendor's consent agreement and being satisfied. So it doesn't matter what the vendor put into the consent, technically you don't have a condition to review the content of the consent. So whatever requirement the vendor put into the consent, you have to agree. So that at that point, you don't have other kind of condition. The only condition is the vendor consenting, which the vendor has already consented to this assignment. It's just that the vendor has some requirement, right?
Normally, for this situation, last year my experience at the beginning, the listing agent and the buyer agent, we will talk with each other. Okay, we will regard it as a non-transferable at the beginning. Because if we finish the order offer, then put the agreement. At this moment, the assignee found, oh, their help, like you said, 10,000 or maybe 30,000. Well, it's so easy to kill their deal. So at the beginning, because right now a lot of builder do not transfer.
Yeah.
So it's better at the beginning of when we put the offer, just let the buyer know, the assignee know, each 90% or 95% is non-transfer.
That's a very good way to do it. This way, basically, you manage the assignee expectation, right? So if they end up getting anything, it'll be a bonus. And I think if the assignee and the seller are aware of this very early because of the market right now, basically, in most of the transactions, the seller is willing to negotiate a deal given the current market. Yeah.
Have we not, like, as you say, upfront contact the sales office or something like that to, like, during the negotiation period, like, you already know that all those benefits are not transferable, like, then you can negotiate the deal easier during the buyer agent and seller agent negotiation time? Would they answer you?
Yeah, they will. They will. Most sales office will. Sometimes the sales office will answer you, and sometimes they'll direct you to their lawyer, and their lawyer will answer you. Because at this time, it's different from the first question. You're not asking about to proceed to the assignment. You're just asking for this unit. If we're doing assignment, are the benefits transferable? I'll say 80% chance they answer you like within a day or two. But we have seen a few vendors no one's responding to you. But so most of the time you can get an answer. Right? Okay. Okay, so the third point is that at this stage, the signer, so this is all before the assignment deal is firm. So the signer should confirm how much the assignment admin fee is. Sometimes it's written in the assigner's original APS how much the assignment admin fee is. Sometimes there's an amendment to say that it's a benefit of free assignment, so 0 assignment admin fee. But if the original APS specifies that there's going to be an assignment admin fee, but doesn't tell you how much it is, like the signer definitely need to ask because it could be very, very expensive. And the same point as those, if you only find out about the expensive assignment admin fee after other conditions are waived, there's no turning back. You have to pay for it because it's part of the vendor's requirement. Okay. Oh, and also the best way to find out about this is also ask just to email the sales office. Sometimes you will see it's a very it's free assignment from the original APS, but the assigner they have done something to make them in default, and then the vendor will take away the free admin fee. Okay, so you maybe end up paying something. So the best way is to confirm with the sales office in writing. Okay. So this is a assignment admin fee. And then it's a mortgage approval letter. So almost 100% of the deals, when the vendor is reviewing for the assignment, they will require the assignee to provide a qualified mortgage approval letter. So these days, the vendors have very specific requirements regarding the approval letter. They will tell you what we need to see on the letter. So you can just get a letter from a mortgage brokerage if you want. As long as it qualifies all the requirements. It doesn't have to be the mortgage that you actually use for closing. Okay? It's just to prove that I have the ability to obtain a mortgage, I have the financial ability to close. So you need to make sure that you can get this before the assignment agreement is firm, because this is most definitely going to be part of the requirement. Okay. All right. So any question about?
Yeah, regarding the assignment fee, because when the builder starts to sell the units, they're broadcasting as assignment free.
Mm-hmm.
So assignment free means assignment admin fee is free, or assignment legal fee is free. What's the difference?
Okay, so you have to take out that amendment because a free assignment is going to be amendment and take a look at the actual wording. But in most cases, assignment free means admin fees free. They almost always charge you the legal fee, but the legal fee is not going to be too much. It's normally around like $1,000 plus HST from the vendor's end. It's the assignment admin fee that's free, and that's the part that you should be worried about because assignment legal fee is never like much off, right? Like a few $100s, but this could be like very expensive if it's not free. All right. Okay, so we'll talk about important things that's going into the assignment agreement, okay? So first, it's about the vendor's consent condition. So all of your assignment agreements have the vendor's consent condition, right? Because this offer is conditional on successfully obtaining vendor's consent. So in that consent, there's one part that you can change, and every agreement like is different. It's how many days you have to have the vendor's consent. Basically, you can customize it to your need, and that's why it's important to confirm whether the assignment window is actually open right now, right? Because if you represent the signer or the assignee, you want this like days, condition days, to be long enough for the vendor to approve this deal. Because let's say if you put into 60 days and the vendor's window is not open or they're very slow, then you may not be able to receive the consent within that 60 days. Then there's a chance that the deal can get. It's a long time, right? The market may be changing, and the signer and the signee's position may be changing as well, right? They may change their mind. So what you want to do is to put in a period that's long enough for you to get the consent, and you can put into another sentence to say that what's going to happen if you don't receive consent within those, let's say, 60 days, right? If you represent the signer, you may want a right to say that, like, we can extend this period if both parties agree. And if you represent the assignee, you may want to put into a condition to say that after the 60 days expire, the assignee can choose to extend it for, let's say, another 60 days. Just don't put into a sentence to say that after the 60 days expire, both parties will negotiate in good faith to extend, because like those two parties are in conflict, right? And after the change of time, they may not agree on this anymore. So you want to finalize this, like put into a specific right at this point, okay? And this can also help you to complete the transaction, right? Like once the transaction is entered into, you don't want any party going back. Okay, so that's the vendor's consent. And then you can control the timeline as well. Like in assignment, we have seen a lot of dispute. Basically, if a deal is very smooth and vendor gives consent very soon, normally it's going to be a smooth transaction. But if the vendor is dragging along and like one party is dragging along, then there could be a lot of conflict and problem down the road. So you want to control the timeline as well. You want to put in your agreement, there's certain requirements that, for example, when the vendor give you the required document list, right? Like those like IDs, mortgage approvals, you want to require the assignee to provide those documents within a certain timeline. Like a week should be more than enough, more than sufficient. You want to put in this timeline, and you don't want the assignee to use this as an excuse to drag it over the condition period, right? We have seen that happen. And also, you want to put in a timeline how long it will take the signer and the assignee to sign the consent once it's received. Like a couple business days should be more than enough as well, okay? So this is how you control the timeline. Okay, payment schedule. There are different ways of payment schedule in the assignment agreement, but most commonly seen like those two ways. So the first kind of payment schedule is when you sign the assignment agreement, you give an initial deposit, and then you wait for the vendor's consent. Once you get the consent, fully executed consent, then you have 3 business days to pay the remaining balance. And then we do the closing, and then we can release funds to the signer. Okay, so for this kind, the transaction is complete very fast. Like it's beneficial to, it's more beneficial to the signer because the transaction is done. Basically, the remaining part, the signer is not involved anymore. It's worry free. But for the signee, basically all the money are paid upfront. But this way, the transaction is finished early. Okay, so the deal is complete. We'll email the brokerage to tell them that transaction is not complete. So everything's done very early, very clean transaction. And the second kind of schedule, you pay the deposit, initial deposit. You wait for the consent, you pay the second deposit, and then you wait for final closing. Okay. Upon final closing, the final balance of the assignment will be paid. So this way, the whole assignment transaction is dragged to be very long, but it's more protective and beneficial to the signee. Because one thing, they make sure that I actually final closed with the vendor, okay, to pay you the remaining assignment profit balance. And second, the assignee will be able to get the mortgage upon final closing, and they can use the mortgage to help them to pay for the assignment, right? But the whole transaction will be dragged very long, and the assignment is not closed until final closing. So the assignment is not closed, commission not released, okay? You have to wait until final closing. But this way, like obviously, just from the assignee's point of view, is more beneficial. Okay, so those two are, there are a lot of other variants based on those two kind, but that's the basic payment schedule.
So, question. Let's say we are using the Schedule 1
Yeah.
type of payment schedule, right? So we have heard a lot of builders end up canceling the project, right? So what if, let's say I already paid the initial deposit, paid the balance and everything paid, and then end up the builder
It's
cancel the
not finished,
project?
right? Okay, that's a very good question. So on the next page, there is a clause that you can choose to add in. Like if you go with this kind of schedule, then you should tell the signer that I want to put in another protective clause for the assignee. Okay, so it's gonna be actually, never mind, it's not the next, it's the page after that. Okay, so it's gonna be you're asking the signer to return the profit part to the assignee if the vendor fails to close the transaction. Okay, you can do that. This gives the assignee a legal right to pursue the signer for the profit difference if the project fails. But it's very difficult to enforce. Okay, it's a legal right, but to enforce the legal right, you basically just hypothetically, we close, and then a year later, the vendor is saying that, sorry, I'm canceling the project. Then you see that clause from the agreement. You email the signer's lawyer saying that, okay, I need this money back. And the signer's lawyer will email the signer saying that, oh, they need the money back. And it's possible that the signer is just not responding, okay? So if that happens, the only way is for you to take this agreement and go to court to pursue that amount. So it creates a legal right for you to get the money back, but it's hard to enforce.
So it's better to the Schedule 1.
Yeah, depends on who you represent, right?
Yes.
Schedule
Yeah.
2 for the seller,
Yeah.
Schedule.
Sometimes the same. If we present the for assignee the same, we still choose the Schedule 1. It closed earlier, right?
Yeah,
Then
yeah.
if something happened, the Schedule 2, then you are the assignee's agent, the same, a lot of headache.
It's a lot of headache.
Yes, it's better to Schedule 1.
So
You get a
basically,
commission from first.
Yes, yeah, both, right?
basically
Both
when we review, when we do lawyer review for the agreement, the most important terms we don't change because it's
Yeah,
assumed
sure.
that those are the foundation for your negotiation is already done, right? So if we see that you already picked one of the schedules, we're just gonna go with that. We're not gonna propose the other one because which one you're gonna be able to get depend on the market, depend on the deal, right? So that's the foundation part of the agreement. We're not gonna touch. Okay. All right. So about taxes. Okay. So Krista already explained the part, like the accounting part. So I'm gonna add on a little bit from the legal perspective during the assignment. Okay. So during the assignment, the signer should definitely consider what's the actual cost. So the cost will include the assignment admin fee, assignment legal fee, and also the tax expense. So the tax expense part, so this will require that the signor should get a very professional accountant to be involved in early stage in order to know how much they should actually sell it for, right? Whether they're breaking even, whether they're making a profit. Okay. And then regarding the tax resident, so right now, like these days, when I first get an assignment agreement, if it has a lawyer review condition, the first question I ask my agent is whether the signors are tax resident, because it will change the clauses I'm adding into the assignment agreement. If the signor is a Canadian tax resident, then this tax part, the signee doesn't need to be worried about, okay? Because the signor will take care of all the tax payment, because it's the seller who is selling that's incurring tax consequences. The only thing we're gonna need from the signor is their declaration saying that, oh, I'm actually tax resident. So if that's the case, then as the buyer, as the signee, you don't need to worry about tax, okay? So if the signor is not a Canadian tax resident, that's when we review the assignment agreement and we'll add in certain provisions regarding the taxes, okay? So if the signor is not a tax resident, we're gonna add in basically two holdbacks, okay? One is the one that's mentioned by Crystal, the 25% holdback of the assignment price until the taxes are cleared. So as this part, I'll talk about some practical examples where the signor doesn't have 25%, okay? So it happens that these days, because some of the assignment deals, the signor doesn't make a profit. And it could be the case where the signor's lawyer doesn't have the 25%. It just doesn't have enough money in the trust account. So theoretically, if we represent the signee, we should require the signor to take money out of their own pocket and goes into the lawyer's trust account to make up for 25% of the whole back, right? But I've never seen it happen, basically. Because in this case, the signor is not a tax resident. This person highly likely overseas, okay? And they're not gonna wire some more money into their lawyer's trust account to make up for the 25%. And at this point is where the signor side pressure the signee side, okay? And this is very early stage, this is before the agreement is firm. So they're gonna pressure the signee side to say that this is how much we have, do we have a deal or not? And at that point, the signee will ask us to help them assess the risk. So what we should do is that we should take a look at how much the signor's lawyer is actually able to have in the trust account. And at this stage, accountant needs to be involved to give an estimated calculation of how much tax is actually payable. Although it's not accurate, but in this market, because it's a very good deal if you don't have 25%. Okay, that means you're not making profit. The seller is not making profit. So the signee normally will want to accept this kind of deal. So we have seen transactions, especially under this market, where less than 25% is held back, where both a signer and a signee are very well aware of the risk, but they want the deal. So that's practically it could happen that way.
So say that the signer and the signee, like basically they sell the same original price.
Yeah.
Right? So there's no profit.
Yeah.
And you see the original purchase and sale agreement,
Yeah.
right? So I guess common sense tell you that this guy should owe no tax. Right.
So in Crystal's presentation, you can see that when they do this tax clearance, there could be like other possible costs, right? There could be other things.
Yeah.
So what we do is that we definitely want to hold back
Some
even
money.
everything. So we want to hold back everything the seller's lawyer have in trust.
Yeah.
It's just that after assessing the risk with the accountant, the signee may accept that this is, like say, it's 20% or 18%, that's how much we're holding back. I know it's not 25%, but I've consulted my accountant, I accept this holdback to make the deal happen. Okay, and the second holdback we're gonna ask is the HST holdback. So basically, the HST, that 13%, we're gonna ask the lawyer to hold in trust, and this cannot be released to the assignor, and it has to be paid directly to the CRA from the lawyer's trust account to ensure this money, is still there. The same reason, and this need to become a clause and put into the assignment agreement, because if you don't put this into the assignment agreement, then the assignor's lawyer may tell you that my client is gonna pay, my client has an obligation to pay, but I'm not holding back. Okay, so that's why when we review, we ask whether the assignor is a tax resident. If he's not a tax resident, we always ask for this holdback. And in this market, like again, because of the low profit, we normally find out at this review stage the assignor doesn't have enough money. Because if we don't do this, we don't actually dive into the calculation, the assignor side is not going to tell you they don't have enough money for holdback.
Also, for the lawyer, they're asking like the seller, basically the assignor, okay, are you a tax resident, right?
Yeah.
Is it just based on what they say, or is there?
So the seller has the seller's lawyer, the buyer has the buyer's lawyer. The seller's lawyer has the sole responsibility to determine whether they're satisfied that the seller is a tax resident.
How do they determine?
Yeah. So if we are the seller's lawyer, we'll look at the situation as a whole. Maybe Crystal can add on this later, but what we do is that we see whether the situation is satisfactory, okay? So if the seller has a status here, so it's PR or a citizen, and the seller is here, so the PR citizenship card is valid, okay, and the person's here, then this person is a tax resident. We'll treat them as, because there's no reason to doubt this, right? If the situation is more complicated, like it doesn't have a status here, it's totally a permit, we'll see if this person is here, is actively working, we'll ask for past year's tax return, or maybe also enrollment if a student, or employment letter if it's working, then we can also be satisfied. Yeah. So, but if the situation is more complicated, like the PR card has expired, this person going back to overseas for years, like other, like it's more vague, then we are not satisfied. Then there are other ways to deal with this, basically. So it depends on how clear the situation is, because the CRA's merit is that you have to take the situation as a whole and to like look at whether, like, how many ties this person has with Canada, right? Yeah. Okay. So, but as the buyer's lawyer, we don't need to do anything. We don't get in touch with the seller. We take the seller's declaration with the seller's lawyer. Okay, so. Okay, so other small points that you can put into the assignment agreement, okay? So evidence of compliance, because when we're doing assignment, we care about how much exactly the seller has paid to the builder as a deposit. And there are many forms of proof that we have seen. The seller sometimes provided a postage check, their agreement purchase and sale, but it's not official record. What we want is evidence of compliance, okay? So if we have a chance to review the agreement, we'll always ask the seller to provide evidence of compliance. It's the most
If they lost it?
Sorry?
What if they lost it?
Then as the buyer's lawyer, put in an agreement that they have to provide it to us, and then the seller will have to request from their the builder's office, yeah, if they lost it. Okay, because that's the most official way to prove that they actually paid for it, okay? Sometimes in the consent agreement, the builder will tell you to summarize how much the seller has paid, but sometimes they don't, and you wouldn't know, right? So you still want the official record. Okay. And this point is where we were talking about what if the project fails, okay? So if the vendor fails to close, then the assignor should return the profit to the assignee. This is obviously a provision to protect the assignee, but whether you're gonna, so all of this is good to have for like one party, but whether you are gonna end up getting it depends on the negotiation power, right?
Let's just say, sorry for a lot of questions.
No worries.
What if the builder, cancel the project and they return the deposit? Does it return to the original purchaser or return to the?
It's returned to the assignee. So who they're gonna return deposit to, it's gonna be written in the consent agreement. So in the consent agreement, you will find basically they will explain the adjustment on the deposit they already received. And these days, almost 100% they're going to tell you that the deposit paid by the seller to me, I'll be keeping it at no adjustment, but I will assign it to you, the buyer. So if the project fails, the seller is out of the picture, and the buyer will become my new purchaser. I'll return deposit to the buyer. Okay. And then indemnity. So this is a general provision, and the seller and the buyer can indemnify each other for anything that they did when they were the purchaser. And if they were in default and caused some loss, they should be responsible for that. Okay. Okay, and then occupancy closing. It's clean if you can for the occupancy closing, but sometimes you can't do that, and you do the assignment after the occupancy closing. So at this point, you need to write into the assignment agreement how to adjust for the occupancy closing, because occupancy closing, there will be additional deposit paid, which should be adjusted, and there's going to be occupancy fee paid, the monthly fee. Normally, this part is not adjusted, so the seller will pay for occupancy fee up until assignment closing date. That's why you need to be very clear when is assignment closing day, right? Because there's a conflict right there. And assignee, so the buyer should pay for occupancy fee after, like, starting on the occupancy date. Okay. So those are some other small points. Yes.
Question. So this is the during the occupancy time, right? Because this year the occupancy fee I think paid to the building is very high. A lot.
Yes.
A lot of the assignment or rental. So like this situation, when we accept the assignment, this is the for this unit like already rental. So the assignee can claim their
So they can't get an HST rebate back, right? Because it's already used by another party. So what we do is that when I review, if you tell me that it's already after occupancy closing, I'll put into another provision. This provision is the seller's representation and warranty, and the seller is going to represent and warrant that no one has ever used this unit for any purpose before. Okay, they have to make this declaration, and if at that point they say that, oh, forgot to tell you, it's already rented out, or I already live in it, then it's going to disqualify the buyer from getting the $24,000 rebate. Then we need to negotiate a deal. Like the seller need to compensate, right? So that's how it works.
So it means it used if the vacant can get the HST rebate if used.
Yeah.
Is that right, Kristen?
Usually, if it's new buyer use its rental property, and then previously being rent out, I think in that case, we still can get a rental rebate. The more complicated is if the first user is rent out, and then the new buyer buying this assignment is for principal resident. That will be complicated. You will not qualify for reduced paying off this HST on the closing days.
And with the same purpose. So if the assignment is self-used.
It's
Not
only situation is same purpose for
Same
rent.
purpose. Oh,
But first buyer is principal resident, and then second buyer principal purpose is still not qualified. Understand that?
Occupancy, principal residence, and then.
Because it's first buyer being principal resident, and then second buyer being principal resident. When they apply on the closing, builder will refuse to reduce this HST amount, right? And then when you apply, sorry, you are not first person living there as principal resident. Because previous owner being living there, that's no.
so in this case, if the seller have the plan for assignment, so it's better. It's just vacant.
Yes. Oh, one more thing I want to mention. Right now, like last month, we have one case. It's being rent out 6 months. And then have a second lease is 1 year. come to the other accountant recommend there, okay, don't represent first 6 months. Okay, just give me the second, because
Second 1
revenue
year.
agency need
Yeah,
1 year,
yeah.
right? So the accountant submit the document. But revenue agency figure out that property, previous
six
tenants
months.
only
Rental.
6 months. They go to the annual list, looking, there's 2 lists within 6 months. And then they search revenue agency's file. The first tenants putting tax file, saying, claim some tax benefit, saying, oh, I'm lower income, I pay the rent for 6 months for this location, landlord's name. And then revenue agency come back saying, okay, even you only represent the second lease, it's 1 year, you are still not qualified because you probably being first lease only 6 months, we are disallowed. So first lease need 12 months.
So for this situation, if we accept this unit on the assignment, so we need to require the first lease agreement from the assignment.
Continue at least 12 months.
We just take
Transfer.
over the.
Highly chance to
On the
this
chance.
case. These will be being audited for this long run to get back these 24. Just worry about this. We don't want to handle this complicated case. Even revenue agencies, sometimes they change the rule, saying, okay, if transfer this leasing, we are not have a chance, no, it's allowed. So
So just
empty there, yeah,
Just
you,
right.
if you want
Empty is
sale,
better.
yeah.
If rental, so 1 year's lease agreement, don't do like a shorter rentals.
But in that case, the landlord, first they signing 1 year, but the tenants just break the contract,
Yes.
the leftover.
Oh, then 6 months.
Bad luck for that.
It's better we can.
Yeah, better we can after 6 months and then doing the second lease.
Well, actually, I have a question. So for that, after closing, like let's say they rent out for a year, right? So when can they begin to apply for the rental rebate? Is it when they sign the 1 year lease or after the 1 year lease is done?
You need to qualify both, closing date, after closing date. And then you have a 1 year lease. So you don't need to wait the lease end.
I see.
这转让费
You
特
can
别高啊，
apply for the
谁受得了
rebate
不错啊？
as soon as you have
But during
the
occupation,
1 year
occupation
lease.
period, you cannot apply because you don't pay the
都有风险，都有风险。
Yeah.
没有
You don't
没
pay
有
the
风险。
price on the
I see.
最大的
Okay, so as that point, is you're using a 1 year lease, right? So if you apply for the rebate, you get the rebate, and then if your tenant doesn't finish the lease, then it's more okay, right?
If revenue pick up, you putting effort
这
lease
三次没出过事儿，
again,
这
within the
个
term, yeah,
这样
that's the
就
trigger.
钱交了。
Otherwise, we just empty there,
真这个
nobody
风险
knows.，
作为一个 seller，你来给
So for the
你影响
investment
了 seller
property,
主要是
just
大
wait closing and then apply for the HST.
Apply, we take it, we pay and put it on Airbnb. Don't put it on
最好
Amazon.
转让那些很快
No, I don't
close，
think
基
so.
本上没啥。
Airbnb is safe. No, it's public
Yeah.
information. No, even worse.
Even worse.
Then when you sell Airbnb, you will try to.
Yeah, yeah, I know, I know.
liability 和 benefit 一起
Okay,
assign。
so regarding the assignment consent document, okay? So this is like an extremely important document. And this is when you actually find out all of the vendor's requirements. So those things they're not going to tell you beforehand unless you ask. Okay, so in this consent document, even though every single builder has it differently, but what we see that actually affect you are those 4 things. Okay, so the first, if they're canceling the benefit, they're simply going to write 1 sentence in the consent document to tell you, oh, sorry, nothing is assignable. Okay, and that's when you find out if you don't ask before in the very beginning. And second, they're gonna tell you, this is like 90% of the chance they're gonna include this provision. They're gonna tell you that doesn't matter if you, the new buyer, actually qualify for the HST new housing rebate, like you're gonna occupy this unit as your principal residence, we're not gonna help you apply for the HST new housing rebate. So what this means is that on the final statement of adjustment, so your final bill with the vendor, with the builder, you're gonna see an additional $24,000 added onto your purchase price. You have to pay this to the vendor upon closing, and then after closing, find an accountant to help you try to apply and get it back from the CRA. So there's gonna be the additional cash flow turnaround, okay? So 90% of the chance they put this into the consent agreement, but sometimes we see on final closing, they forget about this and they just help you apply for it anyway, okay? So if they do that, then don't say anything. It can work out too. Okay, so the start point, they're gonna tell you that for the seller, even though you have done this assignment, the assignment is gonna be complete very soon, but the seller, you are still gonna be held responsible for anything not performed under the agreement by the new buyer, okay? So this happens in, I'll say 100% of the consent agreement. So the seller is never like just walk away free. But at this point, I have actually never seen a signor that will be held responsible when the assignee fails to close, because when the assignee purchases this assignment, it's basically they're sure that they will be able to close, like they have sufficient funds. Okay, so the fourth point is that the builder is gonna tell you that the new buyer is not going to be entitled to the carry-on delay closing compensation. So this is just a very general provision. It happens in basically every assignment. This is like a delay compensation from you're entitled to under carry-on if the occupancy closing date is too late. It's delayed too many times, so too late. And it doesn't necessarily mean that you actually will get this. It just means that you're giving up this right. It's very hard actually to get this compensation these days because we know that all the occupancy dates are delayed many times, right? But if it's delayed because of unforeseeable delay situations such as strike or the pandemic, it doesn't count. Okay, so it's not that easy to get this, and it's up to $7,500. So what we just tell the clients is just that you're giving up this right, but it doesn't necessarily that you were originally entitled to this. Okay, and this happens everywhere. This is even when you want to make any change with the vendor. Okay, so if you're the original purchaser and you want to make any change about the agreement with the vendor, they're gonna take away this right.
I purchased one townhouse with mezzanine, and then after 2 years, I realized the neighbors get at least 7,500. But I don't, because I don't find a good lawyer, and then lawyer didn't tell me because first time, after that I know I find before I met her, okay.
So
So I realized
normally lawyer do or accountant do or the owner do that.
So for this, we tell the purchaser when they're doing the closing that you may be entitled to this because it's very difficult to determine whether you're entitled to this. You need to go home and find all the notices the vendor has previously sent to you. But an easier way to do this as the owner, you can just email the vendor and to ask, like, am I entitled to this? And if they don't respond to you, or if they do but they don't give you this money, you can go to Terria, and the Terria will take a look at all the documents and will enforce this. Okay, so remote closing. Regarding for pre-construction. For occupancy closing, so both occupancy and final closing, we can do remote closing, but it's just there are things that you need to deal with in advance. So for occupancy closing, it's actually more difficult. First, the vendor will ask for occupancy fees. It's normally in the format of post-dated checks. So the buyer, the purchaser, needs to have checks to do this. And sometimes these days, the vendor will ask for pre-authorized payment instead. So the buyer needs to have a bank account, a Canadian bank account, for this to happen. If you don't have checks and you don't have a Canadian bank account, then we'll have to send in a request to the builder, and the builder will ask normally for an entire year of occupancy fee via bank draft. So at that time, you can either wire or provide a bank draft, let's say from a relative that you have here, and then you have to pay that way, but it's a lot of money upfront. But if you don't have a bank account, then nothing they can do about this. You have to pay the entire
Can a
year.
relative pay the post-dated check?
Yes, yes. Second, sometimes they ask for updated mortgage approval upon occupancy closing. So be prepared for that, but this can be done remotely. And third, they will normally ask for additional deposit upon occupancy closing day. So for that, if it's very low amount, you can deliver it to us via regular check, but we need like very long advance notice, okay? Because we normally don't take on regular checks. But if it's normally a low amount, that's why we're able to process this way. But if it's a big amount, then going back to the first point, like you need to do it via wire or your relative's bank draft. So for insurance, it's required for occupancy closing that you buy an insurance for this property, but this can be done remotely as well. Okay, so it's mostly the money that the buyer needs to figure out how to do this before the occupancy closing. And for final closing, the most important part is regarding the HST rebate. So for the HST rebate, sometimes the builder asks for the original copy, it requires original copy before closing, and this will have to, like, the purchaser will have to sign and courier the original back to us before closing. So this can be done as well remotely. We just need advance notice. So if you are purchasing like a property pre-construction for closing, if your client is, then if they are overseas, then let us know, or it can still be figured out. Okay, so this is the last slide. So we're gonna just briefly talk about extension. So basically, a lot of questions we get about closing. One question is the purchaser will ask us, when should I start preparing for the mortgage? And they ask us, when is final closing day? Okay, so when we get the occupancy day closing notice, we will see how it's written in the closing notice. Most of the chance they will just tell us occupancy closing is this date, but sometimes we'll say like 10% of the time they're gonna tell us that we're doing final occupancy closing and final closing at the same time. So basically they're skipping occupancy closing. So if that's the way it's done, then the buyer will have a very short period of time to prepare for the final closing mortgage, because it caught them off guard, right? But in the other 90% of the chance, we will just do occupancy closing, and when they come in to sign for occupancy closing, I'll tell them that once the occupancy closing is done, you should communicate with your mortgage specialist and start preparing for the mortgage, because anytime after the occupancy closing, you can get the final closing notice, and it's almost, you can anticipate. If you have a person that you know very well in the sales office, you can ask informally, like, when do you think the final closing day is going to be? They may be able to tell you a very rough time, but the lawyer, like the vendor's lawyer, wouldn't give us like an estimation. You can only wait for the vendor's notification. And the reason why I say that they should make sure the mortgage is ready to go after occupancy closing is that when they give you the notice for final closing, it's very short. We see a lot of time, it's just 3 to 4 weeks, like 3 weeks. If you want to do a mortgage from scratch in 3 weeks, it could be very difficult, okay? So you should contact your mortgage specialist and make sure the mortgage is ready to go pending the final closing day. There are ways to do that, like they all do it this way. And sometimes we'll get the mortgage instruction like so early, like months before the final closing. Okay, that happens too. So the mortgage agent, they have their own way to secure the mortgage for you. Okay, so just remember, if your mortgage is not ready and you say that you'll only give me 3 weeks notice, that's not a valid reason. Okay, it's totally not a valid reason. And many purchasers, they think that the vendor has changed the closing date so many times, so I can too. That's not a valid reason too. Okay, so we get that a lot. So when vendor give you a final closing date, you have to follow that closing date. If you want to close later, then we have to file a request for you to ask for an extension. We can do that, but with the builders, the extensions are very, very expensive and the terms are very harsh. So for occupancy closing, we get a lot of questions like, can we not do the occupancy closing? I don't want to occupy, I don't want the keys. You have to do occupancy closing. Okay, there's no option for that. And if you want to delay occupancy closing, some vendors can give you a free extension, but some don't. So you have to pay cost. even for occupancy closing extension. Okay, so there's no gain for you. So if you want to like save money not paying something by asking for an extension, it's not gonna work out. Basically, the vendor is not gonna let you make money out of this. And for final closing, it's gonna be more serious. When you ask for an extension, what we have seen before is that we have seen where the vendor is saying that, okay, so you need an extension, but to this date, but we only have two options. You can either close on this day or this day. So you have to match their extension schedule, or they'll give you like a very expensive penalty cost. So basically, their annual interest rate is normally calculated based on like 15 to 20% of the unpaid balance. So that's the annual rate. So and on top of that, there could be other penalties as well, and they could ask you to put in another like big deposit. Okay, so it's very harsh, like overall. So going back to the previous point, get the mortgage ready as soon as your occupancy closing is done. Make sure it's ready to go at the bank.